Price of gold has topped $4,000 for the first time in its history, but is the precious metal still worth a look for investors after such a strong run? Joining us now to discuss is Hussein Allidina, Managing Director and Head of Commodities with TD Asset Management. Great to have you back in the program, Hussein.
Thanks for having me. It's been a while.
Let's talk about gold. Obviously, there's a lot of eyes on it, a lot of headlines around it. You breach $4,000, people are going to get interested, but naturally the question becomes, where does it go from here? What are our thoughts?
So I think the driver of gold over the course of the last 24 months, frankly, has primarily come from emerging market central bank buying. So everyone talks about China. It's not just China. You've got a handful of EM central banks who are sitting on a disproportionate amount of fiat, of dollars, and they've started to diversify on the margin away from that, and that is what's creating, I think, the strength that you're seeing in gold. Now, over the course of the last 3 or 4 months, we've seen a resurgence in interest from the investor community. So if you look at the amount of open interest in the ETFs that follow gold, it's picked up pretty meaningfully. I've been a bit surprised by that because equity market performance has still been very robust, but I think there is growing concern around the independence of the Fed, the stability of the dollar, and that's encouraging some hedging into gold. Portfolio construction, if you don't have gold, you should have gold and commodities as part of your asset mix, because gold serves an interesting role in the portfolio in times of duress, hyperinflation, deflation. Gold is a store of value. So if you don't have gold, I'd say that you need to have it. And I think that if we look at allocations across the world, people are definitely underweight relative to that 2, 3, 5%. Ray Dalio, I think earlier this week, was arguing that investors should have a 15% allocation to gold. I'm constructive gold. I'm not at 15%. I think that does portend to increased performance in gold as people look to allocate at more equilibrium levels.
When you talk about portfolio construction, having gold a part of that portfolio, everything you say always makes sense to me, Hussein, and that makes sense as well. But when people start seeing price action like this and get above 4,000, they start getting a bit of a speculative crowd about how high it can go. Is that not what we should be focused on here when we talk about gold and its role?
So if I think about it from a portfolio construction perspective, if I don't have it, I need to have it. Can the price of gold pull back a couple $100? For sure. I think, probably a year ago I was on talking about, I think we're sitting at 3,000, and I argued that we probably get to 4,000 before we get to 2,000. Ultimately, if I don't have that allocation today, I need to have it. When I look at emerging market central banks and investors globally, they don't have that 3, 4, 5% allocation. And I think that the uncertainty around fiat broadly and the monetary system more specifically will continue to encourage. Can we see gold pull back 50, 100, 150? Absolutely. I think what we're seeing this morning, to your point, is some profit taking because we've had a great run. Gold's up over 50% year to date. But when I look at reserves, particularly in the emerging market, they're still sitting on far more paper than they are gold. And I don't think the catalyst to move back into the US dollar, given how long you already are, is present. And I think that continues to drive demand for gold.
When we started talking about this year and a half ago, 2 years ago, as to what was happening in the gold market, we started the discussion with central bank buying. Do the central banks at this point feel they have enough in their vaults, or is that still a driver?
No, I think, look, so the dollar has weakened. The gold price has moved up a lot. So from a portfolio construction point of view, you have more of your assets in gold today than you did before the move in gold. But when we look at the allocation, again, across the emerging markets, they don't look like Germany. They don't look like Italy, where 80, 90% of their reserves are in gold. They're actually sitting 80, 90% still in paper. So it's been a big bid for gold because the buying has had a disproportionate impact on the gold balance relative to the paper balance. But I think it continues. It's structural. I don't think that the trade is done for sure.
When we talk, so gold as part of that commodities portfolio, but some people might be in the mindset now when they look at gold at these levels to say, gold will be my commodities part of the portfolio. What, to caution me about that thinking?
Yeah, so look, I think when you look at what gold does in a portfolio, it does a fantastic job in the extreme tails of the distribution. When things get really, really bad, gold tends to perform. That's what we're seeing happen right now. In the context of portfolio construction, I would argue that you want to have a commodity allocation because commodities, the benchmark includes gold. 28% of our fund is in gold. But the other commodities serve a different purpose. Today we see copper prices trading, very, very strongly on the heels of production disruptions in Freeport's mines and other mines globally. The demand for copper is poised to continue to grow because of the demand for power generation stemming from AI and the sorts. So I think you want to have a more broad-based approach, unless you have conviction and you say, I, Greg Bunnell, think exactly this is what's going to happen, then your portfolio construction is going to look different. But you want to build something that is a bit more balanced, a little bit more all-weather, because we don't know with conviction what is going to happen tomorrow. So you want to have a portfolio that is going to do reasonably well in all of those environments.
Greg Bunnell, never know what's going to happen next. That's why I enjoy life so much. But would it be unfair unfair question to ask how much higher gold could go from here?
No, look, I think that we will continue to move higher. If you look at gold historically, when it moves, there's a lot of clustering in returns. When there's uncertainty around the reserve currency, when there's uncertainty around the monetary system, you see gold perform quite well, and that's effectively what's happening. Do I think we can have a couple $100 pullback? For sure. Do I think we're going to go to 5,000 over the course of the next 12, 16 months? I think so, because I don't see debt deficit. I don't see the religion on the monetary policy side, frankly, and or on the fiscal policy side.